Hey, good morning, everyone. How are you today? It's Louisa here, and this morning I want to go over the trade that I took, not off the 9:30, but about an hour later. I was taking my dog to doggy daycare, so I wasn't here when the market opened. But having done my I guess my analysis yesterday, I basically was ready for a move higher, so I was bullish. I want to take you through that, but the trade that I actually took was a bearish trade, so it was counter trend. If you did not take a trade this morning, or you were stopped out, or you weren't exactly sure where price was likely to go, then this video is for you, and I hope to shed some or provide some clarity on what I saw in the market. Doesn't mean that I'm always right, but anyway, hope you get something out of this. If you could like, share, and subscribe, that would be awesome. I want to start on the higher time frame as always. Now, when I'm doing my analysis over the weekend, I'm always starting on the monthly, the weekly, the daily, and then I move to the hourly. While I'm trading, I have the hourly chart up and I'm looking at ES as well as NQ, although I trade predominantly NQ. From time to time, I trade ES. But I want to show you what I have on my chart for this week, the levels that are important to me, and what I was looking for this morning, and what presented itself this morning. So let's get right into it. So here we have NQ. This is the hourly chart, as you can see here. And the levels that I'm looking at are levels, we have the settlement price from Friday at 414. You will find that on the Friday, the last candle closed. That's the settlement time. So I want to have that on my chart. I have up here at level 26,267, I have Friday and Monday equal highs, and that is from a week ago. So we can see here this green line. These are equal highs. So anytime I see equal highs, I want to make sure they're on my chart because this is where liquidity resides, and IPTA will want to revisit this area. Just below that, we have another area of equal highs. These candles here have equal highs, and so this is another area that is important to me. And then finally above, we have at 26,401, we have the October high, which is I believe it's the all-time high. Let's just take a look. Yep. Here's our all-time high up there. So these are the main levels that I'm looking for. So the highest level, then the equal highs, and then the equal highs here. So overall, I was bullish going into today. And last night, what I want to keep my eye on is what London and Asia are doing. So we're going to go down to the lower time frame, and we're going to take a look at what happened to Asia and London, because they are the precursor for what's going to happen in London, in Toronto AM session. Also want to point out that down here at 24,724, we have last week's, well, we have November low and we have the previous week low. So price came down here last Friday, so the Friday before the weekend. Price came down and then it started this movement up. So this is a very bullish movement with equal highs resting above. So this is one of the reasons that I was bullish this morning. So let's go now down to, I also want to point out that this blue area here, this is on the weekly. This is a fair value gap, a very important fair value gap on the weekly. If you don't have that on your chart, go into your weekly chart, identify that that fair value gap and put it on your chart, because it's one of the most important levels for this upcoming week. Okay, so let's drop down now to the 5-minute. Now, I spend the most of my time on the 1 hour and the 5-minute. This gives me a sense of what's happening on the higher time frame, and I am waiting for price to hit a level that I have identified on my hourly chart. And when one of those levels are hit, then I want to move down to the 5-minute, and I want to start looking for a potential trade. Not that there's going to be a trade, but a potential trade, and what that entry model might look like. So at this point, I just want to describe what my entry model looks like. It's super simple. It appears pretty much every day and sometimes multiple times a day. So on the higher time frame, I am looking for institutional order flow. I am looking for a draw on liquidity on the higher time frame, and I am looking for a point of interest. Now on the lower time frame, sorry about the noise here. On the lower time frame, I am looking for, I'm going to put a little bit more detail in here just to help you out. On the lower time frame, I am looking for displacement. I am looking for a sweep of liquidity or a purge of liquidity. I am looking for a change in the state of delivery. I am looking for an SMT, so a smart money time. So I want to see a break in correlation between ES, YM, and NQ. And then I'm looking for, most importantly, I'm looking for time. Now, what do I mean by time? Well, the way that I trade is time always comes before price. So even though you may see a setup based on price, I wouldn't take that trade, or I wouldn't start looking for an entry model to that trade until time is right. And what do I mean by time? So the macros that I'm looking for are XX45 to XX15. And for me, that is New York AM, so that would be 9:45 to 10:15. If I don't see anything in that time frame, I'm looking for 10:45 to 11:15. And yeah, so those are the times. That's the macro time. That is when, if price is right and time is within that macro window, that IPTA, if it wants to move, has the highest, the highest frequency of wanting to move to the intended price. So I always wait for those macros. So I'm never in a rush to take a price or to take a trade outside of those macros. If I'm trading London, it's kind of the same thing. So for London, I'm looking for 245 to 315 or 345 to 415. Again, these are the macros that I use for London. And these are based on New York time, okay? I think we're all talking about New York time. Okay, so that is basically what I'm looking for. So let's just move this over here so that we can refer to what it is I'm looking for. And I'll show you the trade that not only I took this morning for 96 points, I think it was, 94 points, but I also want to show you a couple of trade opportunities that I didn't take, but had the setup and you could have taken. Okay, so again, we're on the 5 minute. Now I like to be on the 5 minute time frame because I find the 1 minute time frame, you can really get shaken out. It moves pretty fast. But the 5 minute time frame and the 2 minute time frame give me enough time to kind of analyze what's happening. The trade setups look a little clearer to me and I make less errors. Now, oftentimes I will move down to the 1 minute if I'm looking for my entry model, but I'm talking about before I actually see my entry model, the 2 minute and the 5 minute are giving me clarification on whether my setup looks like it's potentially setting up, okay? And then once I see the setup, then I'm happy to move down. I'm content to move down into the 1 minute time frame to look for a precision entry. And what do I mean by precision entry? Well, precision entry to me is an entry where I have very little drawdown, so my stop loss would be in the proper place, but pretty tight. That would be a great trade opportunity for me. So, okay, so let's let's start with the 9:30 open. Now again, I wasn't here at 9:30 because I was taking my dog to doggy daycare today, but this vertical line here is the 9:30 open. Now the other few important things that I have on my chart is I always have the 9:30 open. So I'm just going to make this a little bit bigger for you guys. So we have the 9:30 open, and as well I want to have the midnight open, which is this one here, and you'll see it when we get onto the smaller time frames. The midnight open is a really important time frame. I want to sell above midnight and I want to buy below midnight. So those are some sort of key levels that I want to have on my chart. So let's go down to the 2-minute and let's take a look at what happened at open today. And again, you'll see when I show you where price came down to, why that's so important. Okay, so here's our midnight. This is our vertical line for midnight. Here's our 9:30 open. And let's just first take a look at, here we have Asia. This is our AM session. This is our London, London, London. So these boxes here are divided into 90-minute time cycles. I use time cycles to trade. And I learned about time cycles from Zusi, so I'll drop a link into the description below if you want to check him out. So here's Asia. Asia pretty much trended last night. So Asia opened higher than Friday's close and then just moved up. London had some price distortion, and this here was a trade opportunity right here. This manipulation right here. So what happened, we had price distortion in London. London dropped down and it swept liquidity down here. So this was an opportunity to go long. So I'm just pointing out the opportunities that were available today to go long. London moved up. Then we had some more price distortion. We had some accumulation. And then we get to the 9:30 open. Again, I'm on the 2-minute time frame here, and here we have the 9:30 open. Price drops down, but it does not sweep any of the liquidity that was engineered last night. Okay, so price drops down and immediately begins to move up. And I have this inverted fair value gap in here. I believe that is from this is actually a BISI, so I'm just going to throw the BISI in here just so that it's nice and clear what I'm looking at. And the BISI is on the 2-minute, so I'm just going to put there 2-minute. Okay, so price immediately moves up, and moves up, and we start to see some price distortion up here. Now, in my mind, because of the higher time frame, I'm thinking about the equal highs that are above here that we had looked on the hourly time frame. And so I'm expecting price to move up to those areas of equal highs. But that does not mean that price has to move up there today. That is price liquidity that is available for the remainder of the week. And it could be on Wednesday or Thursday when we actually have news that price may get up there. But I have those levels on my chart because I am anticipating price to go up there. This is not advice, this is just my analysis. So when I see that price started to develop some weakness in it, again, I'm looking at time, and let me just mark here for you the 10:45 is, let me just put a line in for the 10:45. Starting about here, this is 10:36. So I'm interested because the next macro is going to start at 10:45. So I'm becoming interested. I see price moving up, but there's price distortion. So we have wicks to the upside and we have wicks to the downside. And on these three candles here, so candle 1, candle 2, and candle 3, we see that we have a nice strong busy candle. Okay, so this is a fair value gap going up. Why is this fair value gap important to me? Well, anytime price is moving into its area of interest, it tends to move there with a burst of energy. And we call this displacement. So when I see this sort of displacement, I'm going to put this fair value gap on my chart. Now I'm watching as price is moving in and out of this fair value gap. And it still looks at this point that price wants to move higher. But the fact that it keeps moving down into this fair value gap instead of continuing upward gives me the impression that price is beginning to wane and that we might see a pullback. And why do I call that a pullback as opposed to a short? Is because I'm bullish. I'm bullish for the week. But we know that price is not going to move up continuously. There has to be some sort of a pullback. So I've got this very important fair value gap on my chart. And now what I want to put on my chart is I want to put potentially, where does price have to move below to give me a change in the state of delivery? Well, let's look and discuss what a change in the state of delivery is. We see these candles move up with strength and we form a high right here, and the time is 10:36. Price moves back down into this busy, this fair value gap, but this time it drops below the change in the state of delivery. And I'm going to make this a little bit higher so you can see it a little clearer. Change in the state of delivery is the candle or series of candles that created the upward movement or the downward movement. In this case, it is the series of green candles here that was the last push up before price started coming down. So I put my red line here, my change in the state of delivery, because I know if price moves below this fair value gap, this busy, it then becomes what? An inverted fair value gap. And why is that important? Well, when we have an inverted fair value gap on the leg moving up, and we have invert in a SIBI fair value gap on the way down, then this gives us a pretty good indication that potentially there may be a reversal in play. Now what we see here is this candle, and this candle. These three candles are important to me. I've got my eye on them because it is a balanced price range. Okay, so price came down, price came back up, moved down again, and the bottom of this wick is tapping the top of this wick. This is a balanced price range. So this is a signal to me that price doesn't want to move any higher. So let's just take a look again at the higher time frame here. Let's get our instructions. Go back to the 2 minutes. Okay, so what am I looking for? Higher time frame, institutional order flow. It's been bullish. I'm looking for a draw on liquidity. We swept all of this. We swept the AM session, we swept London, and we're up here now. We're looking for in the lower time frame, so we're on the 2 minute, we're looking for displacement. Well, we have displacement up, and we also have displacement down. I'm looking for a sweep of liquidity. Well, we've taken out all of this liquidity, okay, here, and this is the last candle up. I'm looking for a change in the state of delivery. Here is my change in the state of delivery. I have an inverted fair value gap. I have a balanced price range. As soon as price tapped back into this inverted fair value gap and was showing weakness, that's when I got into the trade. And I'll show you that in just a second. Now, where is my stop loss going? My stop loss went above here. So I'm just going to drop this in. Ideally, if you wanted to be super safe, you could put your stop loss above the high here, but I didn't feel a need to do that because I was fairly certain that price was going to begin its expansion downwards. So anyway, there's where I put my stop loss. So long as price stayed below this inverted fair value gap, this is where my reversal started. Now by this time on this candle, it is 10:38, bearing in mind that we're on the 2-minute, and this candle here is the 10:46. Well, that's the beginning of my macro. So that's when I entered the trade. And now let's take a look at where is the likely level that I would want to exit this trade. Well, I'm just using the staircase. So we have a staircase moving up. So here I'm putting in this fair value gap. This would be an important fair value gap. And if price wants to continue momentum downwards, it has to keep disrespecting these PD arrays that are on the buy side of the model. So this is the buy side right here. Just to keep this really simple, this is the buy side. And here we start the sell side. We know that price is fractal, and we can see these market maker buy side and sell sides on every time frame. So the hourly, the 5-minute, the 4-hour, okay? So it just depends what time frame that you are trading into where you will want to be looking for your reversals from your buy models to your sell models. So we see these big candles displacing down. We're in our macro, and now logically, as I'm in this trade, I'm looking to see how price is going to respond to this fair value gap. If we see price immediately bounce above this fair value gap, and we see that this BISI is supporting price, then I may want to think about exiting my position here because this PD array is holding. But as it turns out, price comes down, taps in, and continues its descent downwards, its expansion downwards. Now this leads into what we were discussing earlier, which is what was happening with Asia and London this morning. So I had my 5-minute BISIs, because again, we're talking about looking at the staircase down. So here was the change in the state of delivery for price to move up. And so now I'm looking to see how is price reacting to these BISIs on the movement down. So we can see that price came down, it tapped into this BISI, it came below this BISI, but immediately snapped back up. Okay, so if we draw a line from here to here, we can see that price swept these lows here. Okay, so what I'm going to do is just put this in for you here. So this is a sweep of liquidity. And we'll put that on the left side. Now, I would have liked to have seen price move down and sweep Asia, but that is a long way down, especially if my bias is bullish, okay? So at this point, I'm pretty content to be taking my profit here, and I'll show you that in a second. Again, this is the sell side of the model. This is an area of interest in terms of where terminus is, where I would want to exit the trade. And this turned out to be, I think I exited in this BISI here because price then began some distortion and we swept liquidity here. So I'm not going to stay in, with hopes of sweeping Asia. Asia may get swept later this week. Just make sure you have that on your chart. But now that we're down here, I just want to show you the trade. So let's just go into here. I trade on a live account. So here was my entry right here on this green candle. So price came back in. As soon as price came back into this inverted fair value gap, I went short. I exited with a position. I pyramided out here. Again, this is a key area because it's a busy. Price continued to drop and I exited my position, my final position on this candle here. So all in, it was a 94-point run. It was 4 risk to reward, which is great. And yeah, so that was the trade. Now I just want to show you how you can use this same model, exact same model, and how you could have taken along here. So let's just take a look at here and let's just follow through with what we can see here. Okay, so the sell side of the model is complete in comparison to the buy side of this model. So hopefully that makes sense to you guys. We'll take off the stop loss here. I'm going to keep this inverted fair value gap on my chart because it's important. And now I'm going to put this one on my chart because this is also important. Again, it's just a stepping stone, right? So this is a SIBI. And we are on the 2-minute. Okay, so let's take a look at how this would also have been if you had missed the initial run up. If you had missed this expansion downwards, you could have taken this trade up. So let's look for these exact confluences here that might have given you the opportunity to take this trade. So on the bigger picture, price has expanded up and come down and come right back into these fair value gaps, the important fair value gaps from this morning. We swept liquidity here, so now we can anticipate, and the word is anticipate, that price may go back into a buy program. So what do we need to see happen? Well, we need to see displacement. So we have strong downward candles moving down through these bissies, with this candle showing a nice wick below this important level here, sweep of liquidity. Now we are looking for displacement out. Well, we have displacement out, but where is our change in the state of delivery? So on the 2-minute, it's a little bit clunky here, but let's just take a look. Here's our series, 3 down close candles here. So change in the state of delivery on the 2-minute is here. Change in the state of delivery. I'll just make that a bit bigger for you guys. Or you could go down to the 1-minute when we have a lot of price distortion like this, back and forth, back and forth, back and forth, big wicks, big candles in both directions. This is when I would move down to the 1-minute and things can be a little bit clearer. So we have this wick down, we have a sweep of liquidity, then we have price distortion. Price never comes down to take this low. And we have change in the state of delivery. I would still keep changing the state of delivery here, right here. So this is the last movement down. So we have these 2 up close candles here before this last movement down. So above here is our change in the state of delivery. What are we looking for next? Well, I'm looking for a fair value gap to form. I'm also looking for strong candles. I'm looking for momentum out of here. Do we have momentum? Yes, we do. And now I'm looking for an inverted fair value gap on the left side of the curve. Now that is not as clear, but there is a very nice one here. This is an inverted fair value gap. So long as price holds above here, I would be content to take a long position. Now price moves up very quickly. Depending on what your entry model is some traders are content to take a long as soon as we break above change in the state of delivery. I'm a little more conservative. I want to see price come back into this fair value gap, and I'd like to see it at least get above the inverted fair value gap. But again, it comes down to what your model is, and of course you have to back test it and forward test it to see, you know, if that would work for you. Now, a beautiful entry is right here. When we see the series of candles moving out with strength with displacement, I think to myself, I have to be a little bit careful because price could come all the way up here and then come all the way back down, and then you're left holding the bag. So when price moves up this quickly, I am patient and I am going to wait for price to come back and retap either this inverted fair value gap or this BISI here. Now, with such strength, we might not see price come back to this BISI, but wouldn't it be nice if it did? What a great entry that would have been. Now, you could have entered a limit order here for a tap back into this inverted fair value gap and then take price right back up. And where are our important fair value gaps? Well, this inverted fair value gap right here, and this was our change in the state of delivery up here. So I would be watching to see the reaction of this inverted fair value gap. Now again, let's not forget what we're looking at on the higher time frame. So let's just take off this for a second. Let's just go back to what our higher time frame map is. Equal highs here, and all-time highs, October high here. Okay, so again, I'm anticipating price to hit these equal highs, but price is never going to go, it's never going to go all the way up on a Monday right off the bat. I mean, it could, but what is the likelihood of that happening? We may not get up here until CPI. We might need a red folder day to give us the impetus for price to get back up there. But I hope that you found it helpful to see how I use fair value gaps, whether they be BISIs, SIBIs, or inverted fair value gaps. And all I'm doing is following them down, having the important ones on my chart. And then when price moves into a reversal pattern, I am just merely following those same SIBIs and BISIs all the way back up and watching to see what the reaction is to those BISIs and SIBIs. We're either going to respect them and price won't move any higher up, or we're going to disrespect them and price will continue to move up. On the hourly here, we can see we have a very nice SIBI here. We're at the 50% of this range. If price gets above here, depending what time it is, we may reach for these equal highs. We could even potentially reach these equal highs here. But it's just thinking about using those PD arrays as stepping stones, So when price is coming down, then you're going to put your larger size important SIBIs on the chart, and when price does a reversal, then we're going to be using those BISIs to walk back up the ladder towards the next level of interest. And of course, time being the most important confluence for me in my trading model. So hope this has been helpful to you guys. If you don't mind liking, subscribing, sharing, that would really help me out. I've put some time into explaining this this trade this morning, some things to look for, and I hope that it does help to sort out some of the confusion. I remember what it's like, and I still do, when I've clearly missed the move or I've clearly got the direction wrong. I mean, How many times does that happen? But over time, the more time that you spend on the charts, the more time you spend watching, the more time you spend putting the PD arrays on your chart and watching the reaction when price hits those PD arrays, trading gets a little bit easier. Trading is never going to be easy. It's simple, but it's not easy. But at the 3.5 year mark of trading now, I'm seeing these repetitions week after week after week. And it makes trading so much less stressful when you know what you're looking for and you're willing to wait for time to provide you with the opportunity to narrow down your search into that 1 or 2 minute time frame to look for an entry model. Have your stop loss at the right place, and then look for that next area of terminus, when to take partials, and put together your strategy that you could just look for every day. And when your strategy doesn't appear, you don't take a trade. You just wait. And patience at the end of the day, for me, definitely has been like the toughest thing in trading. But I've become so much more patient over the last year, and waiting for these great trades, getting 100 points. How many times a week do you need 100 points? Two, three times? Would you be happy with that? And cut out all the, the poor trades, the B and C level trades, and just wait for your model to come up. Have 4 or 5, even 6 confluences in your model. Put your stop loss at the right place and put your take profit. Don't get greedy. That's another thing I've really had to contend with, is greed. Greed for me was and continues to be a thing. I tend to like the longer runs, and sometimes I just think, why wouldn't price run 150 points? But anyway, I am constantly working on myself, and the model is working very nicely, and I will continue posting these updates in the hopes that this may resonate with someone and help someone else get closer to their goals. So hope you have an awesome Monday, and I'll see you later in the week. Take care. Talk to you later. Bye for now.